Today, Bitcoin did see a push to the upside, trading at prices just above 10,700. The S&P also did see a run to the upside today following this downward sloping range. What's very interesting to me is that last night when the S&P futures began trading, we saw a gap to the upside, and overnight the S&P futures began climbing, and then we saw a breakout to the upside today. Bitcoin last night started to trend up, started to break above some of that resistance, and began gaining support in this area at the exact moment that the S&P futures opened up and gapped to the upside. It is all very correlated right now. And in my previous video, in the beginning of the video, I was talking about how Bitcoin could very likely see a push up towards 10.9K, towards 11,100. And this has nothing to do with what my previous macro analysis is suggesting. And as we discussed in my previous video, the S&P did develop bearish divergence on the weekly chart, and we did see a major rejection down. And what we know for a fact about the S&P Bitcoin correlation is that whenever the S&P sees a major top with a reversal, Bitcoin also sees a reversal. It has happened every single time. And also, when the S&P finds a major support level, every single time, Bitcoin also finds major support. It's all very correlated. And in today's video, I want to discuss why today's price action does not affect my macro analysis, and why I still expect a major downturn in the stock market, and why this could be very bad for Bitcoin in the end. In the immediate term, there are some bullish things taking place for Bitcoin, so we're going to be discussing all of this. So definitely stick around for this video. What's up, guys? Welcome back to the channel. My name is Kevin Svenson, and today we're going to be talking about the price of Bitcoin and its correlation to the stock market and what I expect to see in the not so distant future. Today, Bitcoin is up over 4%, trading just below 10,700 right now, and most of the top cryptos are seeing a nice push to the upside today. And looking at the 30-minute chart for the S&P, we did see a bounce to the upside. And this is nothing out of the ordinary. We've been seeing this happen for the past week or so, where we see, a bounce, rejection, bounce, rejection, bounce, right? We'll see what happens here in the near term. And it's not really the short term that I'm worried about, right? The short term stuff, anything's possible in the short term. I'm looking at the macro picture here. So as we know from my last video, there is a strong degree of correlation between Bitcoin and the S&P. And something I want to mention is that after I posted my last video where I was discussing a potential reversal in the stock market, a lot of people came out and started saying all kinds of things. And I quoted the most common comments I got from you guys and put it into a tweet. And some of the viewers' quotes go like this: "The Fed won't let the stock market dump. Trump won't let the stock market dump. Infinite quantitative easing, stocks won't go down. Trust the Fed." People literally said in the comment section that I should trust the Federal Reserve, which in of itself is pretty funny if you're into crypto. And I said, this is what people keep saying to me. And I find it very scary that everyone is bullish on the stock market. And then I said, take a look at history. And if you click on this image, we can see that this is the S&P election year seasonality chart. And we can see that over the past 59 years, this data ends at 2009. The most common outcome on the average year in the stock market, a non-election year, is a pullback going into September, October. And the most common outcome during an election year, which is the blue line here, is a major pullback in the stock market. Majority of the time, you see a pullback going into election season. And this is, of course, most likely due to a little bit of uncertainty about who is going to be elected next and what's going to happen moving forward. So history tells us that usually we do dump going into an election season for the S&P. And if we're looking at the stock market, if we're looking at the S&P on the weekly chart, we can see that, well, interesting, we actually just developed bearish divergence and we got a major rejection. So far, things are starting to line up. We're getting bearish indications right before the election. And something that I want to mention is that after we had that major collapse in the stock market during the global pandemic, we then saw the Federal Reserve quickly print trillions of dollars and began to prop up the stock market. What we have to remember is that this push to the upside, right, this bounce, is not a reflection of a true recovery. We are in a kind of a disaster situation for the economy right now, and seeing a recovery like this is an illusion of a recovery. We printed money to prop up the market. This rebound that we saw in the stock market is more of an illusion, guys. It's more so the Federal Reserve keeping us afloat so that we don't see an absolute disaster. faster. And as we know, we have not seen a full recovery for the economy, and it does become more likely now going into the election season that we are going to see some downside here for the stock market. And a lot of people are going to get caught off guard if we do see this pullback. And I just want to mention that I seem to be the only person that I know of right now that is discussing this potential bearish outcome in the stock market. And I'm getting tons of criticism right now. People are saying, oh my God, Kevin, you know, the stock market's up today. You were wrong. Guys, one day does not determine the trend. Just keep that in mind. One day does not determine the trend. You got to be careful right now. You know, people keep saying these things like the Fed won't let the stock market dump. And this really does worry me. I really do think that people are going to get caught off guard. They're going to get caught in the windfall, and it's going to be really unexpected for them. And this is my warning to you guys that it is becoming more and more likely that we are going to see a pullback in the stock market. And as we know, these reversal points are never a good thing for Bitcoin. They are never a good thing. In the past, when we've developed bearish divergence for the S&P, we see a rejection on the RSI, another push to the upside in the RSI, so like two peaks before the actual dump. Same thing here. And right here, we're developing that next push to the upside before the actual dump. So it's possible that we could range in this area a little bit, right? The S&P could be remaining up here for a bit, a little bit of volatility before seeing the pullback that I'm looking for going into election season. I could be wrong about this if we do see some good news come out of the Federal Reserve and they start to inject more and more money into the market. Maybe we do see a recovery from this point. And if we do see a recovery from this point, then Bitcoin would enter a major uptrend most likely. And like I said in my last video, seeing a push to the upside for the price of Bitcoin here is totally expected. It's completely normal. But if we do see some rejection in the stock market again, this would just be a major lower high, right? So I wouldn't get my hopes up all too much about this bounce, and I would definitely try to stay as cautious as possible. Bitcoin is currently ranging in between that previous support and this previous resistance area here, kind of in a neutral spot. I'm pretty neutral on this right now. As you can see on the chart, we have the volume profile tool pulled up. By the way, CryptoWatch just added the volume profile tool. If you go to your analysis drop-down tab and click on volume profile, you can actually look at the volume profile tool. And by the way, if you haven't signed up for the CryptoWatch platform, click that link below. It's totally free. So as long as Bitcoin is just in this range, things are still quite neutral, right? We could just see a consolidation in this area until we get a real major signal from the stock market if we do see a recovery, right, or a rejection. Personally, I still think a rejection is more likely. Also, I want to mention that we are getting this bearish cross right now. The 21 is moving below the 55 on the daily. This is a bearish cross. This is the same bearish cross we got before the global pandemic, or during the global pandemic. Bitcoin ran up to these moving averages. They crossed bearish and we dumped. Bitcoin right now is running up to these moving averages, and we did cross bearish already. So we'll have to see how this does play out in the end. The interesting thing about this moving average cross is that every single time in the past they've crossed, right, in the past year, every time they got across, something happened. There was never a fake cross here. Every time they got the cross, and it was a confirmed cross, something major did take place, right? So this is a significant moving average cross. The 21 EMA and the 55 EMA, very significant moving average cross. And right now we are getting a cross to the bearish side. And again, we have bearish indications in the stock market. So all I'm trying to say right now to you guys is be very careful. Be very careful. Don't have too much faith in the Fed, right? Don't just trust the Fed to prop up your stocks. And of course, the bullish argument is that the Fed is just going to keep injecting money. We're going to have a nice recovery and a continued push to the upside for the S&P, and a major run up to the 4,000 range for the S&P. And then in that event, Bitcoin would be seeing a major bull market. That is the bullish argument here. And the 21-week EMA is a very key moving average. We've always held above the blue 21 EMA in major bullish trends. And right now we are above it, which means we are still in a bullish trend for Bitcoin, right? We're still seeing higher lows here and higher highs here for Bitcoin. So remaining above this is a bullish sign. And if the stock market does recover, Bitcoin could enter a major uptrend. Overall, right now, what I see is that we're at a major inflection point. And this is the time to be cautious. Just like every time in the past, when the S&P enters a major inflection point, this is the time to be cautious. And that has been my main message for you guys recently, is just be aware of the situation. But that's gonna be it for me today, guys. I hope you enjoyed this video. Hit the like button, subscribe to the channel, and also be sure to sign up with the CryptoWatch platform. They have added the volume profile tool, which I think is incredible. So definitely check it out. click that link below, sign up. You can watch the tutorial to get yourself set up for the trading features, which are all free now. It doesn't cost anything to sign up for CryptoWatch or use the trading features, so click that link below. And be sure to sign up with the Patreon if you want extra content, and I'll see you guys in the next video.